Hello, I'm Kevin from CryptoMY. In today's episode, I gonna tell you how to correctly trade perpetual contracts on Equation. So let's stay tuned. First of all, remember to follow my channel. If you haven't followed my channel, feel free to go and click the follow, go and click the subscribe, go and click the share, go and click the like if you like my content. This is gonna be episode 4 of Equation. If you haven't watched my video yet, remember to go and watch because this project I actually share a lot of time already, and it's actually a very good project in my opinion. This is not a financial advice. Okay, so this is actually Equation. Equation is actually a decentralized perpetual protocol, as you can see here, up to 200x leverage, trading zero fees. I think this is the most important one. And just a little bit background here. Again, Equation is actually built under the Arbitrum ecosystem for 2 months already, which is I think quite stable for now, and they actually use the BRMM model based on the liquidity pool balance rate mechanism. The total contract transaction I think is more than $20 billion already. So of course, like I mentioned just now, with the zero trading fees, right? The event. This is actually the event. So when you actually trade Bitcoin and Ethereum, or Bitcoin USDT and Ethereum versus USDT using my referral link, I'll put down the link at description below so you guys can use my referral link. So when you use my referral link, you will get zero trading fees. Your trading pairs trading fees will be waived in Equation. Alright, so under the influence of the position mining mechanism also, right, you can also obtain some additional EQU token, which is their token, as holding incentive. However, if you are good in contract trading, I just want to advise you again, before you start any contract trading in Equation, feel free to go and read more about my video, watch more my video, watch till the end to avoid any unnecessary risks. Alright, so right now let's talk about the platform itself. I'm gonna go into the trade now, and you can connect your wallet again through the Arbitrum wallet, and you can see here that between the market price and also the index price up here. Okay, a perpetual swap is actually a contract with no expiration date that anchors the contract price and the spot price through the funding rate, especially the market price, right? As you can see here on the Equation page, is the price of the current contract. Index price is actually the current spot market price based on Chainlink, which is this one. In the daily contract transactions, including the opening and closing positions, taking profit, the stop losses, the transactions are conducted based on the current market price to protect the investors from unnecessary losses in the volatile market. Forced liquidation, right, is actually based on the index price rather than the current market price. So that's the reason why there is a BRMM mechanism to calculate the balance rate of the liquidity pool based on the proportion of the temporary position held by the liquidity provider, and use the balance rate to calculate between the premium rate of the contract price relative to the index price, therefore realizing the discovery function of the contract price. Okay, so this is about the what's the difference between the index and the market price. Of course, when the index price is known, right, the market price is determined by the balance rate of the liquidity. So when the trader opens or closes a positions, it will cause a number of temporary positions held by the LP to change the affecting of the market price changes. Of course, when there's an imbalance between the long and short side, imbalance between the market and index price, it will be more further aggravated. All right, so let's talk about the stop loss and the take profit. As you know, when you trade perpetual swap, right, take profit and stop loss function is the most important thing. Basically, you should set take profit and stop loss These two functions is very important. That's the reason why there is a take profit and stop loss in any perpetual stock trading. Doesn't matter you trade what I trade stock, also you trade forex, so it's the same thing. You want it to set TP and SL. Then if there's no TP SL, then what's the point of trading in perpetual stock? Because TP is actually referring to the automatically closing the position when the preset profit target, when you set the target, right, reaches there. For example, if you set the take profit, you want to take profit, you want to get out the market at 45,000. When the price reached 45,000, you will be automatically out. But let's say if you can only afford to lose up to 40,000, then when the market hits 40,000, it will automatically close your position. So meaning to say you are much more safer in that way, because sometimes, right, people are very busy. So for example, if they don't set TP or SL, right, imagine that they come back to work and then they see the price go up, they lose money, the price go down, they lose money, then they get a heart attack, right? So of course, also to avoid some emotional affecting tradings or inability to monitor the market inconsistently. So of course, by setting up the TPSL, traders can formulate and risk control, do some risk management strategies and improve trading efficiency and success rate. Of course, like any other exchange, take profit and stop loss are automatically closed as the position is closed. However, in equation, take profit and stop loss order are recorded on the chain as independent order and will not close when the position is closed, and will automatically resume effect the next time the position is open. This means, right, that every time you use take profit and stop loss function equation, we need to check whether there is a TPSL order on the chain after the position is closed that need to be closed or trigger price adjusted. Of course, you can always cancel the order by clicking the cancel all button. So basically, once you click the cancel orders under here, you were able to cancel all the orders. All right. So of course, just be careful. Of course, when the price actually rises rapidly or drop rapidly, sometimes the TP order may trigger when the market has just reached the target price. So just sometimes, when it's going to be volatile, the take profit and stop loss will not hit. So you better be careful. Sometimes, monitor a bit here and there. All right. So last but not least, I just want to again talk about the zero trading fees event. Just go and not miss it, because this is gonna be the most advantageous in a perpetual DEX of decentralizations. So transaction costs are very important for contract traders. Nobody want to pay gas fees 1 second before paying any handling fees. But imagine how comfortable it is if you only have to pay like 50 cents to complete a contract order of any amount. Through my experience, the cost of the perpetual contract trading on equation should be around 50 cents, because thanks to the arbitrary low gas fees, 50 cents is actually more than enough. But of course, this is only be charged when opening and closing of positions. So the execution fees are usually about 40 cents, 45 cents to $1, which is fair enough. This means no matter how large a position you open in Bitcoin versus USDT or Ethereum versus USDT trading pairs before the 31st of January, you only need to pay basic gas fees on Arbitrum, and equation do not charge you anything, and you can maintain a minimum margin rate of 0.25%. So of course, don't forget you can also earn equation tokens by holding a position, and the APR this way can actually exceed more than 400%. So yeah, to conclude this, the correct use of the perpetual contract trading arbitrage requires an more understanding of the market and the equation product mechanism. So after this, the difference between the on-chain and off-chain products, the market fluctuations and the risk management also need to be treated with caution. Okay, this is very normal. This video, I hope that I can actually share you some of the helps to trade in perpetuals more safer and rationally. Alright, so if you like my episode today, remember to click like, share, and subscribe. Gonna see you guys soon, and goodbye.